Hello, hello, hello. Welcome back to FinTech Insider Presents Spotlight. I'm Simon Taylor, and this is episode number 34 of Spotlight. In this weekly show, we spotlight the brightest and best in tech and financial services to understand what gets them going, what gets them growing, and what the future looks like. A big part of this show, of course, is your involvement. So please leave the questions in the comment bar and the sidebar, and we will be getting to them. What tech questions have you always had? Jump in. Dive in. Just dive right in. Alrighty, on today's Spotlight, I am joined by Nick Funnell, VP of Engineering here at 11FS. Sorry, Nick, how are you doing?
I'm hot, and not necessarily in a good way. How are you?
Really, really good. Is the air conditioning not working there? Where are you right now?
I'm in the office, and I'll grab one of the booths, and no, I don't think the air conditioning is working in this, but there's mood lighting. Just feels like I'm sitting in a sauna.
You're in a glass cage of emotion, but we'll bust you out of that. And we will talk all about rebuilding financial services from the inside. So 11FS put together a new report, and it really just kind of is trying to expose how tech really works in banking. So I'm excited to get into that with the nerdiest of nerds, our very own VP of Engineering. But why don't we learn a little bit more about you, Nick? Tell us about your role here at 11FS and what led you here.
Sure. VP Engineering, as you said. So I sort of lead all our sort of engineering technologies, specifically within the consulting part of the business. So it's essentially it's architecture, it's tech strategy, with working with clients to solve their problems, and then in some cases sort of helping them build digital propositions. So once we've worked out what we're doing, it's actually helping them build that as well. So it's everything from sort of the paper-based architecture all the way down to actually writing code.
Real mix, getting our hands dirty in more than one way. So what brought you to financial services? What's the insight?
The financial services, goodness. So I've been in financial services my entire career. I did engineering at university, and then sort of wondering what to do with myself next. It seemed like banks were an interesting place to go and do technology. They, obviously banks have money, but they were very, very, they spend that money on technology. They move relatively fast, or they seem to when I was a student, and it was sort of very appealing and a very good, sort of very interesting place to work. And I sort of spent 20 years working in banks. Of course, my view has changed over the years, I suppose, and maybe that's something we'll get into in a minute. But yeah, I spent my time in banking. And one of the things I love about 11FS is I get to do all the things I've always wanted to do in a bank, but it's been too hard to do. But as I say, that's part of the report, and I guess we'll get to that in a minute.
Yeah, the things that seem too hard to do just keep coming up, don't they? So as you step back and look at that, though, what's going on in financial services? Like, what are the pressures on banks? And it's not like they're not spending enough money on technology. So what are the pressures? What's happening in the financial services landscape right now?
Goodness, where do you start? Well, it's interesting. I guess, the world is obviously, technology has enabled everything to move very, very fast. I think one of the things my previous role was around building cloud. I think what cloud has given everybody is it's almost democratized it. It's allowed everybody to build things very cheaply and then scale up very, very fast. So whereas I think many years ago, banks were in a situation where they had the money, they had the data centers, they had the people, they could do things that nobody else could. There was a very high barrier to entry. I think now anybody can spin up a cloud account and create a small thing, test it, and then scale up. And as they get busier and busier, they make more and more money, et cetera, et cetera. So I think that's the first thing. But then I think alongside that, there's so much regulation coming in now. There's more and more sort of rules, regs, sort of things that you have to show, et cetera. And banks are having to almost run to stand still, if you like.
I love that phrase. You got to run to stand still, and it costs a lot of money to run to stand still when you've got like all of this weight sort of holding you back as well. When you've got all of this history and things that you need to do historically. So, what are some of those things? What are the barriers really preventing these organizations? Because they're spending enough money. What's holding them back? Are they just is digital done? They've got mobile apps now, or is there something about like how they're doing what they're doing that needs to change?
There's a lot of things, obviously. So I suppose to pick out a few from a purely technology point of view. Well, I say that, but I think often it's not technology that's the problem. I think what I've found in big organizations and where I've been in previous organizations where we've tried to do something which we think is the right thing to do, because the organization is so big, you're trying to get everybody, every single person in a thousands of person organization aligned in exactly the right direction, all pushing in the same way. And of course, it's almost impossible, because in any organization bigger than a few hundred people, in fact, even just an organization bigger than 10 people, everybody's got a slightly different agenda. And then when you distribute that globally, geographically, and different cultures, etc., it's very, very difficult to move forward towards a given direction, because everybody's just moving forward in slightly different directions. So they spend millions of pounds on initiatives that just fail because they can never really get them going. I think on top of that, you've got so much regulation and control that it's very, very difficult to move fast. So, I mean, if you consider, as an example, I mean, we know obviously Monzo Starling. I mean, one of my favorite examples was the sort of, I think it was the card freezing that sort of Monzo did, which I thought was very cool when I got that. Brilliant. I think it took the nearest bank sort of 2 years to do that. Once they'd seen it, I thought that's a good idea. It took them 2 years, like a big bank, to do that. Even though they knew what they had to do, it took them that long to actually get that stood up, get the resources assigned, get the budget and the tech stack as well. So I think it's that sort of thing that really slows it down.
Well, so and I think that's the thing is banks often get beaten up for having bad tech, but technology often neither is good nor bad. It just is. It's not what you do, it's the way you do it. That you were talking there and alluding to a lot of the processes that sit before it. And when putting together this report, one of the audiences is one of the working titles was "What People Working in Bank Technology Think and Wish You Understood." And so, can you unpack some of that for me? What's really going on? There's these programs, governance, control, or is it just that people are typing on a keyboard really slowly and not writing enough code?
Well, it's certainly not that, right? And I'm always very careful when I say this, that technology is the easy bit, because it's very easy to say that to an audience that isn't technical. If you say that to a coder, they'll they won't punch you, but obviously they'll say, well, all right, come and try it. But I think so. There's a few things. I think in terms of actually getting changes done, I think one of the reasons I was sort of pretty happy to sort of end up in 11FS. As a software developer in a bank, I often found myself lacking purpose, if you like. I was buried in the bowels of the organization, writing code, doing Jira tickets, and it was all very good. But who was actually using that? I never actually got to meet the people who were using it. So I never really understand the purpose. And this is the thing that Dan Pink talks about, sort of autonomy, mastery, purpose. I think a lot of people in banks don't necessarily have that purpose or see the impact of what they're doing. I think secondly, it's very difficult. Writing code is relatively easy, but making change is relatively hard. And I think because of the risk position, shall we say, it's impossible to get, or it's very, very difficult to get a change into production. So therefore, you end up batching them up and doing a big bang release. And I think, by doing that, you lose the ability to make small changes. Your changes become bigger, they become high risk, and you do fewer of them, and it's a sort of vicious circle. So
that's a really interesting point, because your change is hard to make, you do fewer of them. Because there's fewer, there's more waiting to happen. Because there's more waiting to happen, there's more risk. And it becomes a vicious circle in which the changes get bigger, the risk gets bigger, you throw more project managers at it, more planning, and the change gets slower and bigger and ends up not necessarily moving faster. So why do you think that is? Why do you think that that's been the history? Is it just the way things were always done, or is there something more fixed that's caused that? Is it a culture thing? Is it a ways of working, a funding thing, maybe?
I think it's all of those things. I don't necessarily think it's a funding thing, because there's always money, but I think it's culture, it's ways of working. I think particularly the bigger organizations, obviously they've been around for a long time. It's relatively easy to get this right if you start again. But the problem is these organizations, well, I was going to say they can't start again. What they've started to do is sort of synthesize ways of starting again. So, stand up a sort of a neobank, if you like, on the outside of the bank that can move very, very fast and is unencumbered. So that's almost this way of sort of addressing that starting again thing. But I think, Banksters is sort of so big. I think, whenever something goes wrong, you add a new process or a new check, or whenever something, and you need more and more processes, and you put these conditions in place. Nobody ever takes them away. Nobody ever rethinks them. So you just get layers and layers and layers. And we've described them as sort of calcified, or sort of what do they call them? Sort of sedimentary rock, I think David's called them, etc. And you get all these things, and they're all piled on. And there's never a sort of step back and actually look at them and go, do you really need all of those now? And I think second Secondly, I think if you're trying something new, there's no appetite to do it, to put you in a position to sort of to take a proportionate risk approach, if you like. It's why can't you, for instance, just build something that your maximum risk is $20? And actually it's, if there's a security breach, quote unquote, $20, it's not actually the end of the world. Whereas you can't do that because the organizations are so siloed that security is security and everything must be secure, which is not an unreasonable posture, of course, but it just, I think this is one of my big sort of, I suppose, soapboxes around security. I was told in the past, well, you can never be too secure. It's like, well, you can. I mean, my house, if it had no windows or doors, it would be more secure, but it would be useless. You can be too secure.
Well, exactly. It's interesting that banks are in the business of managing risk on behalf of their clients and the economy. In other words, they will lend money to somebody for a price, and that's what your APR is, based on your ability to pay back and your likelihood of paying back. That's the fundamental function of what a bank does. And yet it gets quite absolute when it comes to preventing fraud risk. It's either it's all or nothing, as you say. And if a risk is identified, it must be mitigated, turned off, agreed, and blah, blah, blah. And there was something really nuanced that you were saying there about, like, what's the blast radius of the risk? Like, how much risk are you actually causing? Because if I can only turn on a feature for all of my customers at once, and then I have to be really sure that it works. If I can turn on a feature for a subset of customers and only for a day, an hour, and only for a limited, and I can really have that fine-grained control over how that works, my blast radius is shrunk. So why is that hard to do? What do I need in place to be able to get that done that a tech company might have in place?
Goodness, not an easy question. Well, again, there's lots of reasons. I suppose there's culture and organization, and then there's your technical architecture, like the way your systems are sort of laid out. So you need an ability to experiment. I suppose you need an ability to change. So I think that that's one of the fundamental things we've talked about, is this sort of pace of change. It's as things are happening in the market, how can you respond to them very, very quickly and respond to them in a nuanced manner? So yes, if something changes in the market, maybe you want to roll out a new feature, but actually you need to roll it out in a very small way first, rather than spending 6 months testing this thing in a test environment before you sort of roll it out to the world. Why not test it out with in a small capacity and then go out and out like that? And then if something goes wrong, goodness forbid, you can reduce it down again. So I think it's that pace of change. But then you also you can have the best tech in the world. You can have full continuous delivery with full test automation. You can like Google does. You can have all of that. But if you haven't got the culture that supports it, and I've seen this in the past where you've got engineers who've built a really good pipeline. You've got the ability to deploy to production at the push of a button, but the organization will not let you do it, and it will.
That's such a good point on culture. Like, I think everything you've just said is probably not a surprise to most people working in technology and banks, that they know what a CI/CD pipeline should be: continuous integration, continuous delivery. It's well set up. They can technically deliver in actually really good ways, especially in the more modern parts of their stack on the mobile side or whatever else. But the organization fundamentally won't let them, because there are so many layers of approval that they have to go through from so many different parts of the organization that maybe works in different time zones, or has a 3-day response window, or maybe they'll get back to you in 2 weeks. So they just don't own the delivery inside of the cell, inside of what they do. So it's all well and good to pay some consultancy to bring in the Spotify governance model and have your tech teams work in sort of in a really agile fashion and in a lean startup model. But if you've got to wait 2 weeks to get somebody from legal to look at what you're doing, then guess what? You are SOL, my friend. You are shit out of luck, and you're going to have to wait 2 weeks. And that's a really, really interesting point that tech can't fix.
Yeah, it's interesting you mentioned Spotify model as another one of those sort of bugbears where it's this, I don't think there ever really was a Spotify model. There was an idea, but I don't think it was ever quite like that. But big organizations say, if we copy this, if we do this, then the magic will happen, rather than evolving sort of something bespoke for them.
Well, that always reminds me of the story of the Polynesian islanders in the 1920s who were visited on an aeroplane, and they thought that these foreigners who were visiting on aeroplanes were clearly magicians or gods because they had discovered the power of flight. they got in these animals, and they worked the levers on the inside of these animals wearing a special uniform, and they were able to take flight. So they discover, of course, a downed plane, get inside this plane that is broken, and then try and put on the uniforms of the downed pilot that had clearly crashed or whatever else, pull the levers in the hope that they will create flight. Copying the features or the appearance of success is not the same as really succeeding. And so much of that comes down to culture. And a lot of people spend a lot of money on ways of working, but don't actually change how they work because the funding model hasn't changed. If I can only get budget once a year, then if I want to do a new feature, doesn't matter. You can't do that new feature because it wasn't agreed in last year's roadmap. So the autonomy, the mastery really goes away in those sorts of models. Do you think the pandemic's made people rethink some of this stuff? Because when we saw the pandemic hit, suddenly branches were closed. Suddenly every bank had a chatbot. Like, they can move quickly in a crisis.
I think that's interesting. I think, yes, and I made this observation a while ago. It's all of this, like working remotely and those things, impossible, can't do it until you have to do it. So it's almost, if you want to change, how do you make it an imperative that you have to change and there is no alternative? It's almost like the sort of the burning the boats, isn't it? Pulling up on the shores and burning the boats. It's like, right, we've got to do this now. This is the way it is, and we've got to do it. If there's that option to go back, then you may well turn back. But if you're stuck in it, if you're stuck in a situation where you've got no choice, then that breeds sort of ingenuity and that breeds sort of creativity. So
yeah, it's a constraint-led innovation would be the academic term for a lot of this stuff. But it's also, when your back's to the wall, somehow shit gets done. It's funny.
I like
it's amazing what can get done in a crisis, but it shouldn't have to take a crisis to get shit done. And that's hopefully opened some eyes to what's really possible. So when we talk about a truly digital architecture, we talk about moving from silos to horizontals. What does that mean? What do the silos typically look like, and what are some of the consequences of that? And what does that look like as a horizontal? Can you give any examples?
Well, it's interesting. I suppose silos mean different things to different people. I mean, I think a lot about organizational silos, and it's something I've been particularly keen on. I discovered this, but when my previous role, we did this, where you put these sort of cross-functional teams together and you're sort of breaking down silos in that way. Where I've seen issues is if we talk about organized, like functional silos, if you like, is where you've got your engineering shop, and then you've got security as a completely separate organization, and they are of course quite rightly focused on security, and engineering is quite rightly focused on changing stuff and building stuff, and of course those two are diametrically opposed, if you like. So how do you start to bring those silos together horizontally? How do you start to kind of say, well, okay, you're now all aiming at the same thing to sort of deliver securely, to build things, but to build in a sort of secure way. So I think that's the main definition for me. I think organizationally, I suppose, and technically, you then also get this thing where you start to have duplication across different parts of the organization, where you get mergers, you get acquisitions, you get a thing that one of the things I've found over the years is when you go to replace something, it never really gets decommissioned, or very, very rarely. It's still there. So there's jokes about this, there's cartoons about this, but where you go to build a thing to replace a thing, or to replace 2 or 3 things, and then you've got 4 things, and you like get rid of it. All running.
It reminds me of like you go to buy another couch and you never get rid of the old couch, so you end up with a room that you can never sit in because you've just got nothing but chairs. That's what bank real estate looks like. It's just a room full of chairs and nowhere to sit.
But I suppose in this case, it's almost like a risk thing, because it's everybody's too frightened to get rid of that chair, to take your analogy, because it suits a specific purpose, and there's one person in the family that likes to sit in that chair, so therefore they get rid of the chair. In the same way, you've got technology, like, well, we can't turn it off because although you've replaced 99% of the functionality, it still does this very obscure thing over here, so therefore we have to keep the whole thing running.
That's a really interesting psychology, isn't it? It's like not being afraid of not solving for the edge case in requirements or in delivery. So one of the things when you're a startup is you don't have the luxury of solving for the edge case. So great product design is about what you don't do rather than what you do. And what you get with older products is feature bloat, where it solves for everything. And we can't turn off that one thing that 6 people use, because those 6 people might complain, and those 6 people are important somehow. And actually, maybe they don't really need that. Maybe they don't really like it, or maybe they could find that service from someone else. And that feature is costing you an awful lot of money to maintain. And you'd be better served as a business focusing on what you're really, really good at. So like sometimes it's about what you don't do and making those trade-offs and decisions. And that's so important in architecture as well. Nick, as well, you've worked with a lot of the fintech specialists. You've worked with eKYC providers. You've worked with some of the modern data providers like the Plaids, the TrueLayers, the Tinks. As this network of specialists is emerging, these fintech specialists, how does that change how banks need to think about how they buy, how they think about their technology, given that there are these things that you can just pick up and play with much, much faster?
I think there's always a sort of there's always a conversation to be had about, build versus buy. I think fundamentally it's all about kind of, there are, in any given system, architecture, organization, there's a bunch of what I call boilerplate stuff that every similar organization has, things that you just have to have, if you like. So to pick a software application, there are always some things that always have to be there. If you're building a mobile app, there's always an onboarding, there's always a login, there's always etc. For a banking app, there's always a place where you have money, there's always like a card, etc. Boilerplate. Then there are a bunch of bespoke things. What's the unique part of your proposition? What are the things? Why are people going to use you? So what you really want to be able to do is to focus on the special parts of the proposition. Don't go reinventing wheels all over the place. Because if you do that, you're in a situation where you'll have a team in a bank. If they go to build a sort of a mobile payment app, they don't build the whole thing themselves. They plug into this and plug into that. The problem in a big organization is plugging into those things isn't easy. Sometimes it's very, very hard, because they're legacy. And then of course, you go as fast as the slowest part of your architecture, if you like. So I think where these fintechs are chipping away, they're doing that one thing well. So you mentioned KYC. Okay, here's a KYC thing. This is all we do. This is all we think about. If it's to be kind of to be broad about it, anything that isn't KYC, we're not interested. We're not going to do that. So therefore, if banks can start to think about their architecture like that, so they can start to break down into these things. Well, actually, maybe you can use a fintech, or maybe you build your own, or maybe you tactically use a fintech to test out the idea and then swap that out for your own. We've done this in the past where we test an idea and actually we're giving away the net interest margin for a while.
Interesting. There's this really interesting space of this needs to get done, but we don't want to waste our time doing it. And where it needs to get done, but you don't want to waste your time doing it. It's not where you make money, but it needs to get done in order to make money. There's this sweet spot of where an API or a specialist really comes along and does nothing but that. They obsess about the best KYC journey in the world. They do nothing but that, and they do it for lots and lots of people, and they get really, really good at it. So if it's something that you need to get done, but it's not something you care about, then surely that specialist is kind of the right answer to start to look at. But as you say, if you can't work with them for 2 years because you've got to wait another year before it goes into the budget, and then after that, you've got to wait for it to get allocated to the roadmap. And then when it's allocated on the roadmap, it needs to go through countless bits of testing to see all of the things it needs to integrate in all of the different countries. That's just really complex and really hard, and it's not fundamentally modular and really, really challenging. Nick, we've got about 3 minutes left. I really want to just kind of close us out here by asking, what do you think that, who's done stuff well? When you look at who are your architecture idols? Are the things that you really look for in an architecture to say, these are just really good principles, and this is somebody I'd point out that appears to be doing something like that?
Goodness, it's a tricky one to sort of pick anyone out, if you like, because of course not all companies talk about their architecture, I guess.
It could be non-financial, it's...
Yeah, interesting. I think in terms of architectural principles, it's that sort of small modular, it's the kind of, I think being able to talk about it in the open is a really good thing as well, and being very transparent, because I think, open sourcing things, because I think sometimes you kind of people think the IP is in the code, whereas actually the IP is in the learning. You build the thing, and actually, so give away the code because people can't do it. I think in terms of sort of in architecture, I think it's those small, like we say, those small modular things where you can plug things together. Where you can, the sort of the various neobanks that are sort of, they've done event driven, so they're loosely coupled. So they can take this thing over here like a KYC and plug that in, or then they can plug it out and plug something in again. To the point we made earlier about the we say we want to start again with a big bank. Actually, what you're doing is starting again with all the little bits of it, and you're just replacing one brick at a time, if you like.
I like it. Replace your body one cell at a time. It happens every 7 years, so why can't banks do it? All right, that brings us to the end of the show. Thank you, Nick, for joining us. Where can people find out more about you and everything you're getting up to?
Well, my email address is nick.funnell@11fs.com. Otherwise, probably LinkedIn is probably the best place to find me.
Alrighty. Well, if audience, you've enjoyed two blokes with nearly 4 decades in financial services ranting about technology, don't worry, there's more where this came from. Go to 11fs.com/reports/rebuilding financial services, or just Google rebuilding financial services. That might be the easiest way to get to that link. And it's really, hopefully, the report where we take all of this knowledge, all of these learnings, and just kind of explain what's the challenge that banks have faced historically, and what are their options to deal with it, and how can you think about it? So if you've ever really wanted to understand how banks work under the hood on the inside, we hope it's the report for you. That's all we got time for this week. Remember, make sure you follow us on LinkedIn so you never miss an episode. Go visit the 11FS YouTube channel where you can catch up on previous episodes, but also some of the all-time greats from 11FS. 11years.film is really, really good. Check out FinTech is 1% Finished. There's a load of stuff there about how technology works. Do check us out on YouTube. And thank you so much, everybody. Have a great weekend, and we'll see you next week.